Hi there, good morning. You're watching Market Cafe on ET Now. The kind of move what we saw yesterday on Indian markets, all sectoral index closed in red mark. We barely managed to close above 23,000. Another big selling, a big quantum of FIs are selling. What do that means for markets today? What are the kind of cues that we're gathering from US, from Asia, and what would be the buzzing stocks? We'll get you all that in 1 hour so that we set you up for the trading day today. Well, let's just understand first what are the cues that we're getting from US markets. Now, the tariff trade tension is keeping US markets also in check. So if you look at the move, what was registered yesterday, mixed set of cues has come in from US markets. Nasdaq fell, S&P was flat, and Dow barely managed to close with a minor gain. So a mixed set of cues, and of course the kind of commons markets the traders are eyeing on, what Jeremy Powell has to say is CPI figures, economic front, all that is actually drawing a cautious picture right now from the markets, because one of the members from the Fed committee also mentioned that they are not in a hurry to do further interest rate cuts in the market, and that's what we saw. Tariff trade tension that kept the market in check. Wall Street just braces for now January inflation print. Trade war is what is keeping the market in check right now, and similar kind of move what we saw from the Asia Pacific market also yesterday. US indices barely managed to closed with a gain. Actually, it was on a flat note for S&P, and Nasdaq rather fell yesterday. Key earnings which are to be reported this week, but the more focus is on the CPI front as well as the Fed comments which would be coming in today on Wednesday morning as per US time. Treasury yield, that one was higher on Powell's comment yesterday, because of course what the kind of comments what was made was negative for equity markets and positive for the bond market. The combination, let's understand. In fact, crude also fell yesterday. Moving on, let's understand the kind of move what we saw for oil prices. Oil prices rise yesterday because there are tensions which are being mounted on supply concerns at the moment. Gold, what we saw, has already hit the 8th record high this year. It was again on a record high yesterday, because of course whenever a political instability happens, economic instability happens, then let's get you the figures for gold also, that how gold was trading yesterday. We saw that it is nearing to 3,000 per ounce mark, but yet some more days, maybe some more steps to cover that mark. But at the moment, gold is up, yields are up, but equities is facing the brunt. The tariff trade tension is what we see.